You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo, coming to you from the options capital of the world inside the lovely Options Insider Radio Network studios. We are revamping it a little bit over here. Maybe put in some space for some live guests. Might be kind of fun. We do, obviously, mostly things remotely. So sometimes people say, hey, can we come by the studios and check it out and see you do a show? And we usually say no because we don't have setups for that. But maybe coming into the new year as we're revamping and knocking down walls and doing all kinds of crazy stuff here, maybe we'll set it up so that some of you guys can come by. In the meantime, we're going to set it up so you guys can listen live very shortly. So stay tuned for that. And, of course, in the meantime, while you're getting all of the on-demand fun stuff, where can you find it all in one easy-to-find place, along with maybe a splash, a smattering, if you will, of some options written content? Well, of course, ye old theoptionsinsider.com is a place I may heartily suggest for you if you're looking for a place like that. It's got kind of it all right there for you, all the written stuff, unusual activity, education, analysis, a lot of breaking news from the options market. You can go there just for that alone. And then while you're there, of course, click on the Insider Radio Network tab and just allow the enormity of the network to wash over you. Thousands of hours at your own convenience. A push of a button, a click to download or stream whatever your heart's desire. You want to learn about vol? We got you covered. You want to see something about futures options? We got multiple options for you, pun intended. You want to learn about basic option strategery? Well, we got a segment on this show, and we've got two other shows that are all about that. And I'm missing a bunch. Trading technology, you name it. We got it all broken down for you. Financial advisors, how do they use options? How should they use options? And we got more coming down the pike for you guys. So if you have an idea for a show we don't have yet, you think it would be a good fit for the network, let us know. We'd love to hear from you guys. And joining me on the old program today, let's go in order of distance this time, way on out to the hinterlands, almost to the sheer edge, the precipice, the drop-off at the end of this here American continent. You will find a little spot known as Giovinazzi Land, where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi. And before you fall off the precipice, off the ends of the earth there, Mr. Rock Lobster, how are things in the land of the pit?
The pit is actually doing very well. We are enjoying happy customers and lots of growth. Mark has a webinar tonight, although it's not going to help everybody that listens to the show tomorrow. So things are going well.
All right, a little bit closer to home, a little bit closer to the old Options Insider Radio Network HQ, we find a sleepy hamlet where there's one options trader, but he's a good one. He is Uncle Mike Tusaw from RCM Wealth Advisors, single-handedly driving the volume coming out of St. Charles, Illinois. Uncle Mike, how are things in the land of RCM Wealth Advisors?
I bet there's at least two of us. Well, to answer your question, our future's so bright we gotta wear shades.
I like it. Quotes from the 80s. Sebastian can't be here, so someone's got to take the 80s quotes for him. And I think you're right. I think there was Aunt Agna out there in St. Charles as well. So there's two of you slinging options. She's doing one lots, though, so I'm not sure how much she's adding to the total volume. And speaking of some volume, let's get into it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is, of course, the portion of the show we break down what's rocking and rolling and catching our eye in today's market activity. We're recording this on Thursday, November 19th. For all of you out there playing along with the home game, hard to believe November just cruising by. Maybe because we have the big event in December to look forward to /fear. So that's in the back of my mind all the time, making the month go even faster. And, of course, if you were paying attention, it was Andrew and I were talking before the show here. I think the only way you can kind of describe today's activity was kind of just weird. Weird across the board. We saw weird movements in the S&P, weird movements in volatility. As the day closed, if you just glanced at it on a close-to-close basis, you'd say, not a lot really up there. Most of the major indices pretty much unched on the day, with the exception of VIX Cash, which was up about 1/4 of a point over the 17 handle, even though intraday it plumbed some depths down to about 16 even on the day, which was interesting to see. And then, of course, rally ho mode got up to about 18 1/4 before settling off where it is today, or where it is right now, I should say, right around the 17 handle. Again, going back to what I was saying about the weirdness out there. Also, despite all that movement out there, not a lot of paper lighting it up. Only about 300,000 and some change contracts out there. Pretty light day from a VIX perspective, which usually averages about 740, 750,000 contracts a day. Same thing with the S&P. Had a little bit tighter range than we're used to seeing out there in terms of S&P land. Usually we're seeing it vacillating around 20 handles. Today, not so much. Only really about 8 or 9 handle range out there in the S&P. Again, bouncing around a little bit as well, and not decent volume, but not a ton of volume out there. And the S even today. So a bit of a weird one, a lot of weird stuff, but most of that weirdness kind of focused on the volatility end of the spectrum. Mr. Rocklops, I know you were scratching your head a lot in today's activity. So what was it in particular that made you go,
Things that make you go, That's actually not 80s, but 90s.
Early 90s, we'll count it.
Okay, close enough, right? Sebastian was about 3. Just the December future. Last cycle, it was the November future. This cycle, it is the December future in VIX. It's almost like there's not a lot of liquidity or nobody's in the pit. There's some rumors that somebody has a giant variance swap and they've been buying calls in the VIX, which big chunks of them, which is moving the volatility around today. Rumors about people are bidding for volatility on another terrorist attack, whatever. The market didn't go anywhere, and there was kind of a constant bid, just buyers of stuff, and that makes vol go up. So, and that's what we had. So that's I guess what we continue to have.
That is indeed what we continue to have. And speaking of continuing to have things, we continue to have Uncle Mike, despite my efforts to the contrary to try to replace him whenever I can. But he keeps popping back up on the show, listeners, so I guess we should give him some time. So, Uncle Mike, what caught your eye in today's activity, sir? And don't tell me umbrage, even though you'd be allowed to have some umbrage of that.
Well, okay, then I'll tell Andrew umbrage to Mark. So there, he said not to tell it to you, so I told it to Andrew. I didn't know you were trying to replace me, so I guess I'm gonna have to go into like George Costanza mode, where I just keep coming to work and no matter what, and I'll lock myself in my office.
Just look busy.
Right.
Just look busy. Look angry, and you look busy.
All right. So with that being said, the only things that in the market, in the stocks, there really wasn't a lot that caught my eye. I'm looking up and down my list of things with which to try and find any movement on the day. Apple is probably the biggest mover of all the stocks that I watch. It went up a whopping 1.2%. It's knocked on the door at the 120 level for a little bit, but for now it closed at 118.78. The other two things I think did have some movement today, which could be some possible short covering, profit taking, whatever the case may be. Gold did have a little bit of a move higher today, up a little over 1%. And TLT had a little bit of movement today. Well, not really a lot. It moved up 80 cents. But for today, I would consider that a lot of movement just based on the fact that, well, nothing else happened. With gold, I think we're at a very interesting point. With GLD around the 100 level, I do feel that that is a key number. And I think it's going to have a hard time getting below it. But like commodities, I think that, or like oil, I think that gold is closer to the bottom than it is to the top. But I've said that before.
Now, it's funny you start off with Apple, because I was looking at it today as well. Kind of an interesting day for Apple. You're right, it did rally a little over 1% today, despite the fact that pretty much the only major news coming out of Apple land was decidedly negative. You know, Apple always prides itself on being this marquee name and marquee player, and it was such a huge part of the S&P. We always jokingly refer to it as an index unto itself, and in many ways that still is correct. But looking at the most popular holdings, at least amongst big funds and hedge funds out there, Apple has dominated that as the number one holding for quite some time. And it officially lost that place recently, coming out today as what they're calling the quote-unquote smart money's favorite stock. It's actually all the way down to number 4. The names listed above it here, let's see, are in order, I believe, Allergan, and then Time Warner Cable, sexiest name if I ever heard one, and Valiant. We've been talking about them a little bit, so these funds like to rock and roll a little bit if they're playing out there in Valiant land. Total, the nation's 50 largest hedge fund investors sold an aggregate of about 1.2 billion shares of Apple over the last 3 months ending in September, so for that quarter, obviously. So interesting stuff, again, kind of showing a bit of a loss of institutional confidence coming out in the Apple's way. The stock still rallies, but Uncle Mike, sounds like these guys heard your signal loud and clear. They're saying, you know what? If even Uncle Mike is washing his hands of Apple, then that's it. I'm out. I'm getting out. So there you go. Your impact is felt far and wide.
There you go. My good friend, my good friends and the heirs to Steve Jobs' fortune. We discuss these things on a regular basis, even though they have no clue who I am.
Well, big players clearly following you, Uncle Mike, including the D.E. Shaw Group hedge fund. They sold. They have about $37 billion under management. They dumped their Apple holdings. $32 billion in the Millennium Management front. The fund they also dumped it, as well as the another few others here on the list. So quite a few dumping Apple over there after. Speaking of dumping and stocks dumping, Square, kind of the big, much ballyhooed IPO today, of course, not optionable yet. Don't write into us saying when can I buy puts or sell puts on this thing. But it didn't really light up the way a lot of people think, or were hoping anyway. I know the underwriters were hoping for a range somewhere in the $11 to $13 range. Ended up going public at $9. It did trade up a little bit intraday, up about 43%. So getting up to the upper end of that range to nearly $13, about $12.91 as of the middle of the day or so. But still, a bit of a resounding thud out there. And also some of those, post rallies in the first day of trading have a lot of other alternative agendas behind them, underwriters supporting the IPO, et cetera, et cetera. Not really indicative of true trading public intent. So we'll see how this one plays out in the days and weeks to come. And certainly once it becomes optionable, it'll be a nice new one to add for all of you out there who are looking for the next big thing in terms of, or maybe the next not big thing, depending on the results of his IPO, in terms of a hot tech property out there that might be an interesting one to watch. And who knows, maybe trade some puts on. Mr. Rock Lobster, obviously Square not lighting it up over there in the chat room today because they're not optionable yet. But what about this Apple news or any of these Apple developments? And if those two weren't lighting it up, what was really lighting it up out there in the old pit chat today?
We were trying to fade this vol move a little bit using UBXY. We were looking at time spreads in Disney. We call them Yoda spreads for the trying to look for a trade into the Star Wars premiere. There's
I like
a lot
that.
of hype in there.
I like that. If you're trying to get a way to get my 6-year-old hooked into options, Yoda spreads is a good way to go.
You can start with that one. So that was the D1824, like 120 time spread for like a quarter. I figure that it'd be hard to lose on that one. And actually, by the time our chat was over, I think the spread was up 6 or 7 cents because, everybody tries to put a bid in there, and the liquidity provider robots just move the offers away. And we were also talking a little bit about Valent VRX up, $14 today or something like that. it's either the cheapest drug stock in the world or it's the most expensive fraud in the world. Who knows? But like one of the smartest hedge fund guys, he's down 25% this year. Ackman on this one. I remember we talked about that the short strangle in here.
Yeah.
It might have been his.
That's working out so well.
Yeah, because what they were short, that's down $60 a contract. That's ouchie, Bill.
I'm trying to remember the strikes. You remember the strikes?
It was the one, like the 185, 145.
Yeah. So he's only off a whopping, it's closed at $84 today. Wow. And that's after he got back 11.50 of it today. It was worse this morning.
Yes, that is what we call the no bueno spread. So, I mean, that's the things we're looking at. Just a strange future action, and we'll talk a little bit about the unusual activity. But basically the Fed came out and said, we're pretty much going to raise, unless anything really bad happens. It looks like that's what we're going to do. And my opinion always is, as long as the market can see something that is more certain, vol goes down, stocks go up. They love the certain environment, even if it's, rates going up might not be great. But the fact that the Fed's on a course makes people happy. And then generally that supports stock prices, because then everybody figures, there aren't any of these other big looming problems, except for their giant balance sheet and the government debt. But we won't talk about this.
No, instead we will talk about the successful rollout here. We talked earlier this month. The 13th, the Baker's Dozen Options Exchange launched here in the States. It was, of course, BAT's EDGX Options. It's the number 2 exchange for them, 13th total in the old biz. And again, they've been kind of rolling out names in a phased rollout over time, so they didn't launch with every symbol and every name. That rollout went through the 17th, and so now they're reporting that there really were no errors or any significant issues, and we know BATS has a history of a few of those in the past, so that's a good thing. And so they're up and running, which is kind of interesting. What caught my eye about all the data they were throwing out about this launch and how things were going so smoothly and so well. And I'll have to check. This article just came out. I'll have to check to see if they have their numbers correct. This sounds disturbingly high. But they're saying the market handled their new EDGX platform, not even all of BATS, just they're saying their EDGX platform handled 668 million orders going up yesterday on the 18th. Which is, I think their terminology may be a little misconstrued. Maybe they meant quotes. Maybe they're tracking quotes going through the platform. Because clearly they didn't trade anywhere near close to that many trades. That would dwarf the entire industry's volume by a long, long margin. But that's still, even if that number is even close to correct, that shows how many flickering trades are going up on these platforms on a given day. And the order to trade ratio, how small and kind of disturbing it is. And it shows you if you're putting up one of these platforms and you have to handle just this overwhelming barrage of traffic, and 99.9% of it is kind of the meaningless nonsense, the noise out there you have to filter out for the fraction of a percent, or maybe in this case a few percent, because BAT's EDGX Options certainly isn't lighting it up with 30% market share or anything like that. So they put up that many, or somewhere in that range. We'll have to confirm that number, a number of quotes / what they term orders, to do whatever small percentage. I haven't checked, but I'm guessing BAT's EDGX probably in the 1% range in terms of market share. So that gives you some idea of what the order to trade ratio is on these platforms these days, and why it's a crazy business to launch an exchange in the options business today. Crazy stuff. And speaking of crazy stuff, let's shine a light on all that crazy nonsense. Not just VRX. There's a lot of other crazy stuff going on out there on the old street today, and it's our job to highlight it for you. So without further ado, let's roll right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block. This is indeed the portion of the program where we shine that light into some of the darker recesses of the options world, and we see what scurries out so we can catch them. And today we're going to kick things off Mr. Rock Lobster, I'm not familiar with this first name we're talking about here. Vikes, am I saying that correctly?
You're totally mispronouncing it.
Oh,
It's,
I'm sorry.
VAX.
VAX. Okay, I'm not familiar with this name. Some sort of volatility index. Of course, bad jokes aside, listeners, we are indeed talking about ye old VIX, the VIX cash hovering right here at the end of the day, right around the 17 handle, as I said at the top of the show. Not the most robust volume day for VIX. It wasn't threatening a million, wasn't even threatening its ADV of about 750,000. Did less than half of that, only 330,000 contracts going up today. Yet in spite of that, we did see a little bit of paper that caught our eye out there. See, listeners, it's not all just, hey, who has the most volume in the day? Let's highlight them. No, you got to dig down a little bit sometimes to find those diamonds in the rough. And this particular diamond that caught our eye went up for this is some decent size, because this is almost a third of the total ADV going up today, or excuse me, the total volume going up today, went up in this one, shall we say, sizable trade. It started off catching our eye with 30,000 of the Dees 27s going up, paper buying for 50 cents. Went up in one block over there on the CBOE, so a very well facilitated order on that front. And then it came out kind of bidding 50 cents out and saying we'll take what we can get, and they got quite a few, to the tune of, as the day closed, just to hear 1,200 contracts under 100,000 contracts going up on this strike. So a little bit of size going up here on these Dees 27s. Looks like pretty much a lion's share going up from around that 50 cent price. They went up 50 at 55, so that 50 cent bid probably still firm. They maybe get some more off if you wanted to, listeners. Open interest on this strike also fairly sizable, about 94,000, kind of giving the hint that maybe, just maybe, it's closing. I don't know. We have to dig into the numbers to see for sure. Mr. Rock Lobster, I know this is a new one for you. We haven't really talked about this name before, but what's your take on, looks like someone buying some calls in this Vikes name?
Well, the rumor that I heard, because I dug around a little bit, I had Sebastian make some phone calls. That 50 cent buyer was opening, and supposedly they're trying to hedge some sort of what I would only guess is a short variance swap type contract, because apparently it's a pretty big one.
Yeah, you think? There's a little bit open.
So I guess they've apparently been buying calls as vol has gone up. What's funny is there hasn't been a lot of realized vol, but there's been a heck of a lot of implied vol. So very, very, very interesting. So this was one of those ones where, again, I think, unusual activity, sometimes it looks relatively easy. Other times, not so good, or a little bit more difficult. I think this time, just, knowing that the customer was buying, that the customer was actually buying those to kind of hedge a position. So that I don't think, anyway, it's as an open buy as it appears to be. There's a lot of open interest on that. Obviously, people looking for upside or maybe hedging. But I think this is and that's what a lot of the big firms use. They use VIX to hedge. So I think it was a hedge.
That's the kind of the dark arts of what goes up there in the VIX. We obviously mostly see the listed stuff, and there's a lot of stuff swirling around in the smoky, opaque world of VIX and variant swaps and all the vol OTC stuff. That's a little bit harder to translate out there. So obviously, most of the big stuff we see going up in the listed these days, in the vol space in particular, it's got some sort of OTC component to it, and clearly this one is no different. We're going to move now from this Vikes name, of which I don't think we're ever going to talk about again. I don't think this name does really a lot of paper. But we'll move on to another area of the space in the currency land this time. In particular, the CurrencyShares Euro Trust, ticker symbol FXE, closing, I should say, today. 105.13. This is the name that does about 15,000 contracts a day, so fairly decent paper going up out there in FXE today. Doing a fair amount today, nearly 50,000 contracts going up in FXE today. So a large amount of love, and in kind of keeping with our narrative from that earlier Vikes name, out of money call buyers there, we're going to have some out-of-the-money call love in FXE today as well, to the tune of the Jan 2016 109 calls, where what really caught our eye in the day. One big block going up for about 15,000 and some change, paper buying for 66 cents as the day went on. About another nearly 5,000 going up, just for a total of a hair under 20,000 total on that strike. All pretty much open in paper, only about 2,700 contracts open on that strike. That initial kind went up in one block over there on the CBOE of 15,000, kind of going through, just sweeping offers afterwards, gobbling up all they could. Didn't see any real big prints in terms of stock going up with this one, so it appears to be what it looks like on the surface. Some opening upside call love here in good old FXE. And looking at a chart of this name, this one's been beaten down, particularly in the last month or so. This thing was trading up around the 112 range, has since given up a lot of that, about 7 handles, trading about the 105 range right now. Our friend here clearly thinking that there is a little bit more upside to be found, in particular on that 109 range, and he's hoping it happens by Jan. It sounds so far away, doesn't it? January of 2016, Mr. Rock Lobster, but it isn't that far away. So yeah, my whole frame of reference towards the end of the year gets kind of twisted and warped when it comes to time. So what's your take on our friend here loading up on some upside, swinging for ye old fences in FXE?
I thought that was very very curious. Like, what makes the euro rally? I mean, realistically, right? What's going to make the euro rally a bunch? So that's
certainly not the recent activity we've been seeing over there in Europe. That's not rally ho mode. Maybe for vol, not for the euro.
Yeah, I didn't get that at all. So really surprising. I don't have a. Why the heck would anybody want to load up on out of the money calls in the euro? I've got no. It's all I can say is that's a head scratcher for me. My head is scratching.
That's why we call it. That's also called dandruff, by the way. But that's why we call the segment the odd block, because we get some of the weird ones. And who knows? Maybe our friend here thinking the recent turmoil in Europe, in particular France, will perhaps calm down, and the euro will regain some sense of stability. And who knows? It will reattract currency lovers and buyers out there. I don't know. You're right. It is a bit of an odd play, an odd timing in that name. But again, that's why we call it the odd block. We'd love to hear your ideas, listeners, on why you think someone would really be so bullish on the euro right now. I could think of a few other areas I would devote those resources to if I were him. But hey, that's why he's out there doing that. And we're here just to have fun with it. As we go on to our final name, this is a good old Mosaic company. I think a first timer on the old odd block, ticker symbol MOS. And no, it's not the fun Mosaic of old, the catalyst for all things web browser and Netscape and all the fun stuff that came after it. No, that is long gone, listeners. Instead, this is a single source supplier of phosphates and other crop nutrients and animal feed ingredients. So about as exciting as it sounds, listeners. And closing today, $32.31, up about 1% or so on the day. And this is the name that does decent volume, about 4,600 contracts going up on a given day. Today, doing about 6x that, a little over 24,000 lighting it up today. So a lot of paper out here in good old Mos. And what caught our eye out here? Surprise, surprise. Keeping the narrative, keeping the dream alive. We're looking at yet more upside call love. In particular, once again, Jan 2016, 37 halves going up. Paper loving them for 32 cents, 10,000 times. Again, one block. Mega blocks is kind of the other narrative of the odd block today, Mr. Rock Lobster. A lot of size blocks going up today. 10,000 in the first chunk. Straight up buying. Didn't see any stock anywhere near this thing. And he decided he needed a few more. Picked up another 5,000 total of 15,000, all on just 600 contracts open interest. So clearly opening. These things went out 32 cents at about 35. So there's still bid coming out here, at least in terms of Not a bad little market for our friend who gobbled up quite a few of them, 15,000 total. No stock, no nothing really, so it just does appear to be what it looks like on the surface. Yet more straight up upside call love. And looking at a chart here, going back a year or so in good old Mosaic, this is another one that's kind of vacillating on the lower end of its 52-week range. It got as high as about $54 back earlier this year in February. And like I said, now hovering about 20 handles south of there, hovering around $32. So our friend here saying, you know what, I'm liking this name. I'm liking some upside here by Jan. I think it's got another 5 handles in it at least, and I'm willing to put that up 15,000 times. Mr. Rock Lobster, perhaps not as much of a head scratcher as our previous name, but still a weird one for so much size love. I guess this is going to be bull times for the phosphate market.
Yeah, because that's all the commodities have been in just the dustbin, right? So buying out of the money calls in January. So let's go through the iterations. If you're buying those calls, and let's say you're short stock, do you really want to buy the 37 halves in short stock when the name's kind of already kind of in the dustbin? You know, it's all, the stock is already super cheap. Phosphate prices are in the toilet. That one doesn't make any sense to me. The only thing I can really think is somebody like potential takeout, something like that. But hugely bullish trade. They either know something or they're just hopelessly stupid. That's how I got to think about it.
Yeah, that's a weird one. And you think sexy names that are poised to move quickly to the upside. Phosphate does not jump immediately to mind. Again, kind of like the last one, a bit of a head scratcher, but that's why we call it the odd block, listeners. Maybe you're more in tune to the phosphate market. Maybe you know what's afoot out there. Maybe you want to write in and tell us, hey, there's actually some huge phosphate shortage coming down the pike, in which case this guy looks like a genius. If you are so inclined, let us know. Meanwhile, speaking of letting us know, we're going to do just that because we're going to dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is the portion of the show where you guys get to join us and dictate the tone of the conversation. Every once in a while on Thursday, I like to spend a little time hearing what you guys have to say, and no shortage of ways for you guys to let that feedback be known to us. Probably the easiest way is to surf on over to the website, theoptionsinsider.com. Click on that feedback form or post a comment somewhere. We'll route it to the show. Or, of course, on ye old social media platforms. Pick your platform of choice. StockTwits, Facebook, Twitter, etc. We're on there. Probably easiest just at options on Twitter. A lot of you guys like to use that as well. And, of course, if you are so inclined, we do accept email as well. Questions at theoptionsinsider.com, and that'll, of course, route to us as well. And if you can't find that stuff, too much work for you, it's all baked into our app as well to make life even easier for you. You don't have to get up off the couch to send us a question anymore, listeners. It's just that easy. Going to kick things off. I don't know about you, Uncle Mike and Mr. Rock Lobster, but I feel like getting naked. How about you guys?
I think that, especially on the radio, I think that's a good idea on the radio.
That's a great idea. We should do every show naked, but that's a topic for another day. Instead, we seem to have a lot of questions coming in about naked options positions. So let's just dive right into it. They got a couple of related ones, so we'll just read them together. First one comes from McDuff, maybe a bit of a Shakespeare fan. He writes, hey, what is a naked options position? And then a kind of a related question from Kimble writes, hey, could a naked call pose huge risks, perhaps unlimited? Question mark. Good questions, Uncle Mike. I know you're chomping at the bit here to get back in the old action. We don't have a strategery block today, so this is the closest I can give you. What do you have to say to our friend? Why don't you walk him, both of our friends actually, why don't you walk him through what the heck a naked options position is, and then perhaps some of the risks of ye old naked call.
Got it. Okay, a naked position is an option with which you sell, and that's all you do. Now, let me just kind of go through a naked call and a naked put, so that way we can have an understanding of both of them. Let's say that XYZ stock is trading at $10 a share, and you sell the $10 put, and that's all that you do. Now, if you have $1,000 in your account, meaning if, and the reason I say $1,000 is because 10 times 100 is 1,000, because we have to do this in 100 share increments, then technically, and you sell that $10 put, technically it's not a naked put, it's a cash secured put, meaning that if the stock were to go to zero, the margin risk department would not have to contact you saying, hey, we're going to close the position if you don't send in more money. That is what's known as a cash secured put. So once again, to simplify it, if you sell the $10 put and you have $10 in your account per share, then it is a cash secured put. Cash secured puts are allowed in an IRA, and it's just this, it's a non-levered trade. Now, if it's not in an IRA and you have a margin-based account, you can do what's called a naked put. Now, the amount that's needed for a naked put, usually it's different with every broker, but under Regulation T, it typically comes out to around 25% of the actual risk. So in that example with which I gave, $10 is the actual risk. Now, in a margin account, a lot of times you'll only need a maintenance requirement of approximately 25% of it, which in that case would be $2.50. There's a formula for it, and each broker has something a little bit different. But from my experience, it usually comes out to around the 25% mark. For sake of simplicity, that's what I use in my head as I'm trying to figure things like this out, and that's what I tell people to do. Sometimes a little more, sometimes a little bit less. Now, at times, brokers do reserve the right to raise the maintenance requirement. If they feel it's a volatile stock, they may raise it from a 25% requirement to a 50% requirement or even a 100% requirement. I've seen that. So with that, if it's a naked put, that means that you are leveraging yourself. And if it is a cash secured put, it means that if the stock were to go to zero, you could go to zero right along with it and still be able to take on the risk of 100% of the risk without having any margin calls or anything along those lines. Now, on the call side, there's no such thing as a cash secured call because of the fact that in theory, a stock can go up unlimited, an unlimited amount. So on a naked call, you're selling a call option. Now, let's say that you sell the $10 call option on XYZ stock, then you're obligated to sell that stock at $10. Now, the premium you collect is yours no matter what. You get to keep that premium whether the stock's up, down, or sideways. The premium is still in your pocket. However, you have the obligation to sell that stock at $10 even if it's at $6,000 a share, which that can become pretty painful. Now, the maintenance requirement for a naked call, it's the same as for a naked put, typically around 25%, depending on the broker, depending on the stock. So if you have $2.50 in your account, you sell that $10 call for $1, you're thinking, holy cow, this is a phenomenal deal. I'm getting a 40% return on risk here. This is great. Well, if the stock goes up to $13, then it's really not going to work out so well for you because you are then obligated to go out and buy the stock at $13 or whatever the going market price is and then sell it to that person for $10. So in terms of what is a naked option, it is when you sell an option and you don't have anything else hedging it. An example of a covered option would be if you were to buy another call option to create a bear call spread or a calendar spread or something along those lines to where you don't have unlimited risk, then that would not be considered a naked option. That would be part of a spread. However, a naked option is when you have unlimited risk or levered risk on a short put, because technically the most risk you can have on a short put is if the market were to go to zero. So to answer the question from McDuff, hopefully that answers it as to what a naked option is. From Kimble, could a naked call pose huge risks, perhaps unlimited? Well, yeah. For people who are selling naked calls on Apple for the last few years, they've lost a lot of money. Now, I don't have any issue with selling naked calls. It's your God-given right to trade options in whatever way with which you want, in my opinion. However, I think that of all of the all the thousands of option trades that I've done in my career, I could probably count on one hand the times with which I've done a naked call And even in those situations, it's probably just been as part of a larger trade, meaning maybe I sold a naked call on SPY and I still had a bunch of stocks in the portfolio to where I was trying to do one thing and create something else. But just a pure naked option, I've done very few of those in my career, and I'm willing to bet that Mark and Andrew would probably have a similar answer to that.
I put my naked options always in my barrels of stocks. I find that's the best place to put them. Don't you agree?
In a double barrel, though.
Double barrel, yes. You know, it's funny, on a related note, I had someone ask me the other day, why don't we call just open long options naked as well? And it kind of struck me as funny because no one's really ever asked me that before. I've never really thought of it in those terms before. But, you know, the slow and steady erosion of premium due to time decay doesn't really seem as much of a pressing risk, I think, to a lot of people as being short. And, of course, all you can lose with the long premium is what you put into it. So in terms of having naked exposure, in terms of unlimited risk in the case of the short call, or just a lot of risk in the case of a short put, it's not really the same thing. It can't really increase dramatically. So that's why typically we don't refer to long options as being naked long risk. But as we've said many times here on this show, you go out and just buy long straddles, see how low risk that strategy is. Over time, that erosion is going to kick in and it's going to be pretty painful. So they all have their risks. We just tend to refer to the short end as naked. All right, let's put our clothes back on so we can focus on this next one. Mr. Rocklobs, I don't know about you. I know you like your umbrage, and I think we got some umbrage in store for you here. This comes from Fayecuzername. I don't know. So she, I guess, Faye, I don't know. She's written in before. This is kind of an addendum to an earlier question. She writes, she wrote in earlier about a month ago. I think we discussed it on the show, saying, hey, can you discuss the pros and cons of hedging a portfolio with put-back spreads in the respective index done for a credit? Love all the shows. Thanks for all the education. P.S. Don't say Rocktober this year. She wrote in again with a follow-up saying, hey, I expected more Rocktobers out of sheer umbrage. I did let a few go now and then, but you weren't the only one who requested a non-Rocktober October, so I hopefully delivered. I try to twist the knife every now and again at select moments. But for the most part, I was pretty good with that, I think. Mr. Rocklobster, though, he takes a lot of umbrage. When you talk on umbrage, he's the one to talk to. He takes umbrage to pretty much everything I say and that you guys do, so he's just prone to umbrage. As to the rest of your question, she writes, hey, as to my question regarding hedging with ratio spreads, on Friday I put on a SPY, so November, so going out tomorrow, 195, 190, put 1 by 2. In this case, she's talking back spread, so selling 1, buying 2 in this sense, and doing it for a 2-cent credit. Well done, madam. Discuss and deride. Thanks. Well, I see no derision here. I think this is a perfectly viable strategy, and of course, we're answering about a week later, so in that intervening week, the S&P has rallied, the erosion has kicked in, both of those puts are essentially worthless at a nickel. So well done. It cost you nothing. You got a week's worth out of protection of it, and you actually collected 2 cents, so you actually pocketed 2 cents. So I don't see a lot of derision here. We talked about this. I think primarily the use case we talked about a lot has been out in VIX land, because we've seen some really good success with this type of strategy as a way to kind of play table stakes, keep yourself in the game long enough. Usually it's call 1 by 2s out there where you're selling 1, buying 2, selling the near at the money, buying 2 or more of the out of the money. We've seen some decent success with that size 1 by 2 swap guy out there. Really knocked it out of the park in August when all the vol took off and all the 1 by 2 traders did really well as well. In the meantime, in those days, kind of just not much going on. Vol erosion, you've got that narrow term, a short call. But if things really take off and that's what you're looking for, clearly in the VIX product, then you have those 2 kicking in to help you out. And this is a similar scenario here. He's trying to hedge. He's hedging the Talib way of hedging against catastrophe and not paying a lot to do it. I don't really see a lot of problems with that. Clearly, the only really risk comes in when you start closing around that short strike. Then you might have a few complications there. But as long as you're cognizant of those and you're aware of what's going to happen in that scenario, you're pretty good. And you're certainly good should the worst come to pass. Mr. Rock Lobster, I think we talked about this in the past. I think the last time we had a question on this. Has your position evolved on using the old 1 by 2, selling 1, buying 2 as a hedging strategy? And what's your take on her particular spread, even though it looked like it worked out pretty well?
Well, the biggest thing with 1 by 2s, if you're going to buy 2 and sell 1, is the time factor. Because the closer you get to expiration, the short strike gamma starts to separate from the two long strike gammas. So, if you get a little move down, like what we'll call like like 1%, 2%, 3% move down, you're actually going to lose money because the short strike kind of will start to gain a value, and your long strikes, because of skew, kind of get killed. So the only way the 1x2s really work, when I say buying 2, selling 1, is if you give them enough time to work, where you have Vega positive, and if vol blows up, you make money on the Vega, or it just straight up runs down through the strikes. The smaller moves, when you're close to expiration, the skew actually kills the performance of the trade because the volatility is going to compress as you move to the long strike. So you just got to remember, you have to remember there's a little bit of a timing issue in these ratio spreads. So just remember that. That's all I'm going to say, because you don't want the nasty surprise of thinking your hedge and the market doesn't go quite down a lot, and your hedge actually costs you money, and you'll be upset, bitter, and sad.
Right into us saying, you guys said they were good, but that's why I put that caveat in there. That little bit of range is where you have some problems. I'm more of a fan of this on the VIX side, on the VIX call side. I like it on the S&P side too. We famously have discussed, how Mr. Talib likes to hedge his black swans doing this exact scenario, but you're right, he does construct it in some different ways and does it a little bit farther out and a lot of other things to it. In this case, she did it very near term. It seemed to work out all right for her in this case, partly because the underlying hasn't really looked back since she put it on. But if it was hovering around that 195 strike, we might be having a different discussion. Uncle Mike, what's your take here on the old 1x2, kind of the reverse 1x2 as a hedging tool in this scenario, and using it whether it's VIX or in this case in SPY?
Well, I used to do this on Apple a lot, to where going into earnings, back in the day, just if you go through many of our shows back when I would just take on the Apple earnings like I did, I would oftentimes use a back spread going into earnings. I'd combine it with a covered call on a portion of the holdings from if memory serves correctly. If not, then you can direct our listeners to some of our previous shows to where I go through this in detail. But I think that a 1x2 can work if you are selling 1 and buying 2. I think that it can work if you get a lot of movement, just to kind of add to what Andrew said, and if you feel that volatility is low. Apple years ago used to have that to a T, and it would just be my routine. It was it was probably one of my favorite parts of the day. I remember I'd come onto the show right before an Apple earnings, and you'd say, Uncle Mike, what do you got going into this earnings? And I would just go through in detail the type of back spread with which I would put on. And I think we did that for probably about 4 or 5 quarters in a row, if memory serves. And so I think that it can be a good thing if you believe that the underlying is going to have a lot of movement one way or another. You're biased towards one way, but still think if you're wrong, you're going to be really wrong. And if volatility is low, in your opinion. If you actually have all of those things, then I think that doing a 1x2 back spread, meaning that you are buying more than you're selling, can be a good thing. If not, then it's the right tool for the right situation. And if you don't like it, then I think that it's just one of those things to where I have a fake lake in my garage. And if I'm ever trying to do some work to my boat, and I need to have constant water flow into the intake to keep the engine cool while I'm running it, and it's not actually on the water, the Fake Lake is a phenomenal tool. I think I've used that tool maybe twice in the last 10 years. And I think the back spread, although I've used the back spread more than twice, I think it would kind of fall into that same category of something to where if everything is needed, then it's a good thing. But if not, then, well, just keep it on the shelf for a day that you do need it.
Learn something new every day. Fake a lake. Never heard of it before, so I learned something new today. See, listeners, even we learn stuff here on the old mail block when you send in some great questions. She mentioned it as hedging, too. She's doing it probably with long underlying, so there's other caveats there as well. Of course, if you fall into that range of the short put, you can find yourself picking up some additional underlying there you may not want. So there's some other caveats that go into it, but in all, it's an interesting strategy. We'll have to see. Let us know if you keep doing it Miss Faye here and see how that works out for you. And we'll have some scenarios where it closes around those short strikes, maybe through it a little bit. And like Andrew was announcing it earlier, we'll see how that works out and some of the issues that go around that, because it could be instructive for you as well as for the rest of our listeners. I'd love to talk more about those, but we got to keep on rolling with the rest of the show. Right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
And I forgot to mention on the mail block that whenever I hear these terms, I always have to mention it. I just hate the terms front spread and back spread. I hate them. They're archaic. People don't understand them. They're terribly confusing. I've been in this business for a long time. I've talked to a lot of people who've been in it a lot longer than me, and I've never heard anyone give me a credible reason for the source, the etymology of what those terms come from, front spread and back spread. They make no sense. They apply to nothing, and they're deeply confusing. That's why I like ratio and even reverse ratio. At least it implies, because usually when we're saying ratio, people 99% of the time mean 1/2, long 1, short 2 to collect a credit, something along those lines. And if you're doing it the other way, it's reverse ratio. At least people can get a handle. Those aren't perfect either. Maybe you send in what your favorite terms are for those words, but I hate front spread and back spread. They're terrible. Moving past that, let's talk about what's coming down the pike in the week to come. Earnings kind of getting into the dregs of the earnings season. We got Abercrombie coming tomorrow, which, by the way, I'm not sure if you guys have heard. I know if Sebastian was on, he would have heard, because he's more of a retail nut on the ladies' clothing front, that Abercrombie trying to rebrand itself again. They're trying to be serious adult clothing now. No more naked teens frolicking in their ads. So we'll see, I guess, how that strategy is playing out for them tomorrow in their earnings report. I'm guessing maybe not well. I don't know. It shows how fickle it is to be a retailer to that teen audience. Not trying to be an adult retailer. Kind of hard to do both. And also Foot Locker coming out tomorrow for all of you into the sneaker numbers. And then, of course, we had the old jobless claims coming out. Those have already kind of had a bit of their impact. We see the Fed, pretty much a done deal at this point for December, but you never know. We still got a few weeks to go. Mr. Rock Lobster, we'll start with you. What do you keep an eye on for the rest of this week into the old weekend? I should mention, by the way, too, next week is indeed a holiday week, so that's going to start wreaking its havoc on the market sometime soon, early next week as well.
Well, it should wreak some havoc on the fall. It looks like the Fed's pointing toward a raise, and everybody it feels like the market's getting on board with it. So, besides the scattered earnings, I'm just kind of wondering who's buying all the juice. That's it. No real clue as to why that is.
Yeah, it's kind of odd, particularly, like I said, going into holiday week next week. You don't see a lot of juice buyers. But hey, we still got some time.
But they are today.
Yeah, that's exactly. There they are today. I know it's going to take away from your Black Friday shopping at Abercrombie, Mr. Rockless. Maybe you should get a start on it now. While we were talking, I actually brought up their website. I see all pretty much adults on their website, mostly fully clothed. So I don't really know what to make of this brand anymore. They've turned themselves on their head. Crazy, crazy times. Mr. Uncle Mike, I know you'll be sad to hear that you won't be able to see your prancing half-naked teens anymore in the mall at Abercrombie. But that aside, what's catching your eye? What are you watching for the rest of this week into the weekend?
That's one I'm just not even going to acknowledge. Well, I guess I just did. But anyway, I want to see if we can hold the positive levels of the S&P. We've been positive on the year now for almost a month. I'm curious to see if we can continue to do that going into the end of November. We had a little bit of a pullback last week. And then the other thing that I'm really focused on is GLD. I want to see if we can hold the 100 level because we have not had a test to it as of yet. But if we can continue to hold the 100 level, I think that we're going to have more upside in the shiny stuff.
Well said, sir. We had a lot of naked themes on the old show today, so maybe we should draw it to a close there before things get dark and very, very disturbing. But before we go, as always, I like to check back in with my cohorts here, my partners in crime, on the old All-Star panel, see what they have cooking that may interest you. Starting out in the hinterlands, Mr. Rock Lobster, what's coming down the pike in the land of the pit?
January boot camp, and we're going to do a vol trading class coming in early December. Vol trading for direction. See it on our event page soon.
There you go, optionpit.com/events to learn more. Maybe they're coming to a town near you sometime soon. You never know what the heck those guys are up to over there. Surf on over to find out for yourself. And Uncle Mike, in addition to getting naked and all the other fun things you got cooking, fake lakes, what else is coming down the pike in the land of RCM Wealth Advisors?
Plenty of stuff. If you are interested, the end of the year is coming. If you need help positioning yourself going into year end for both tax purposes and or for just positioning in general, give me a call. I am at 312-212-3531 or send me an email at mtosaw@rcmfs.com.
There you go, listeners. He told you where to go, rcmfs.com, to learn more and to reach out to Uncle Mike and check in with all the stuff he's always talking about here on the show. Maybe you want to ask him how you could use back spreads. I hate that term. Let's call them reverse ratios in your own portfolio, or perhaps not use them, or perhaps put them in your barrel of stocks along with his. Reach out to him at rcmfs.com to learn more. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show, and of course for sending in such great questions. We always get bogged down in a few of them. We have so many more we want to get to. But you send in such great questions. We want to spend time on each one of them because they're all so good. So keep those coming. We read them all. Even if you don't have a chance to answer all of them, but we try to answer by email or however else we can to make sure you guys get your answers. So keep them coming, and we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.